Hello everyone, and thank you for joining us for today's webinar, How Automation is Changing the Face of Finance Teams. My name is Jillian Campbell. I work on the marketing team here at ACL, and I'll serve as your moderator for today. Before I introduce you to our speakers, I'd like to go over a few housekeeping items. Our session will run for approximately 45 minutes, and we'll leave 15 minutes at the end for Q&A. If you have any questions throughout the webinar, please feel free to submit them through the Q&A section of your Zoom consoles. We'll try our best to address them during the Q&A session, but if we can't get around to it today, we'll be sure to follow up directly with you after the webinar. Lastly, we're recording today's session, and everyone who registered will receive an email with a link to the recording and a copy of the slides. I'd now like to introduce you to our speakers for today. First, we have Keith Bailey. Keith is the Director of Finance here at ACL. Keith contributes to and leads various areas of the finance department. He's a qualified Chartered Institute of Management accountant, and he holds a Bachelor of Science honors degree from Loughborough University in the UK. Presenting with Keith, we also have Noni Dalton. Noni is a Senior Product Manager here at ACL. Noni's a veteran product manager with a passion for innovative technologies that meet customers' needs. She's focused on championing solutions for ACL customers, as well as contributing to the development of new product features, market intelligence, and product strategy. I'd like to extend a warm welcome to both of our speakers today, and I'll now pass it over to Noni to kick things off.
Great. Thank you for that introduction, Jill, and welcome, Keith. It's great to have you here today.
Thanks for having me. Excited.
Yeah, it's exciting to have someone from ACL on the line with us today, and maybe we want to kick off with a little bit about your role here at ACL.
Sure. I've been Director of Finance for about a year, but I've been in various roles. I think I've had about 4 roles since I've been joined ACL. I've joined here about 5.5 years ago. I moved to Canada about 6 years ago, and I started in the planning department and then moved to accounting and then implemented the ERP system. And then I left finance and set up the data science function. And then I moved back to take over the running of the finance function. So a lot of this today is very much close to my heart.
Great. Well, I'm excited to hear what you have to share with us today. So I thought we'd kick off with this great quote from E.O. Wilson. "We are drowning in information, but starved for wisdom." For those of you that don't know, E.O. Wilson's actually an American biologist who specializes in ants, but I think this quote really applies to every profession today, whether you work in marketing, if you work in auditing, if you work in finance, because we are collecting more data than ever before. And the challenge is what do we do with this data? Are we actually being able to use this data strategically and in a way that makes sense for our organization to improve the operations that we have? And no part of the organization has more data really than our finance team. So I really think this speaks to the heart of what finance teams are struggling with today. Maybe Keith, you could walk us through a couple of pressures that you see facing finance teams across various industries today.
Yeah, I mean, for finance teams, something that lots of other teams also face, but the greatest pressure we have is the expectation to do more with less. And there is very much a pressure to not add headcount to achieve this. So really we look to technologies to solve a lot of our problems, but that's just an internal pressure. There are also external pressures that force us to do things in a timely fashion, and we just simply don't have the bodies to crunch through all of it. So we have to start pushing things down. Some of the pressures that we face for ACL specifically, I'm sure a number of you on the line will be aware of new accounting guidance such as ASC 606. We've spent a lot of effort using analytics to automate huge swathes of that revenue recognition process. But it's not just that. We get a lot of pressures internally to realize more value from the data we have and to be less backward looking and more forward looking in the value that we create for the business. So we get a lot of pressures from all over the place. People are starting to realize that actually the finance folks, the accountants, actually have a bunch of skills that can be used more broadly across the organization. So they're starting to ask more questions and ask more of us.
Great. Thanks, Keith. Maybe given that these pressures and the impact that they're having on your teams today, you can speak a little bit to what you see the role of the next-gen finance team being for organizations.
Very much it's going to be an elevation of what we do, moving away from what has been in the past, certainly value add activities, but of lower value. So reconciliations and things that fundamentally have to happen on a daily basis. those things have a limited value for the company. They need to happen, but they're not adding as much value as other activities that could actually be done. So if you're working on forecasting or working on, let's say, vendor risk, you can look into things in your data sets and figure out how much risk is associated with particular vendors and then take different actions based upon that, rather than retrospectively finding that you had errors and then going and identifying them and subsequently, say in 3 months' time, having time to even resolve them. So it's very much transitioning away from looking backwards and starting to look forwards and spending more time using judgment rather than just crunching through data and manipulating in a fashion such that people could even use it in the first place. And that's very much what finance has been about for such a long time, is people in finance are great at manipulating data, but it's just not sustainable. It's not scalable to expect that finance organizations could continue in that manner. It's not. You just have to add far too many headcount, and it wouldn't be a rewarding career either.
Yeah. And I think when we've spoken before about this, you really speak to how automation is replacing transactional accounting, as what you called it, in terms of, so by taking over these responsibilities, it really frees up the team to deliver more insights and then provide the professional judgment to guide the business forward, which is really interesting.
Yeah, and there's also, it's an elevation of everybody through the chain. So there's many different levels of people within the finance group. Obviously, you've got frontline staff like APA and accountants, and then you've got managers, and you've got directors, and then you've got CFO. And it's really about elevating everybody so that ultimately the CFO doesn't spend time looking through all of the variance analysis with their team. The team's already done all of the work, has already got all the answers ready for the CFO, and they can spend more time looking into things that the board might care about or looking into acquisitions. It's about elevating everybody. That's what needs to happen in the future for a finance team.
And is that something you're working on today as part of with your team? Is elevating the entire team to that next level?
Absolutely. We'll talk about it much more later, but that's first and foremost the most important thing that I do in my group is getting the most out of everybody. Means basically bringing everybody along for the ride. This is not an exercise in just having some amazing automation expert who goes in and solves all problems for everybody. Those people simply don't exist. And if anybody tells you that they do, they're a wolf in sheep's clothing. That's not reality for finance.
Great.
Something that is probably something we should mention here is that there's a quote from CFO magazine that robotics will automate or eliminate up to 40% of transaction accounting work by 2020. We're already seeing that today. Right now, we're just at the cusp. We're just beginning this process, but even with the tools that we've got and we've had for a long time, we could easily automate vast swathes of things associated to reconciliations, checking forecasting against actual things that are basically just grunt work. You're not adding value through the process. What you're doing is putting pieces of data together. What we care about is the outcome. We desperately don't want to do the stuff in the middle because it's a repetitive task. And that's what robotics, RPA, and all these buzzwords mean for the finance world of today.
That's very cool. I'd like to actually hop in and talk a little bit about process automation and what that actually means for an organization and the things that you need to consider if anyone's building these out. So at a really fundamental level, before you start actually building out automation, you really need to start with your business processes. So you're going to be looking in, they're going to be your fundamental piece and building block of any automation that you do. Upon that, from that business processes, you need to identify the data that you do have and that you're able to use to be automated, as well as looking at those policies and procedures. And what's interesting as you go through part of the process of looking to automate these areas and doing your really understanding what your business processes are is we often see a lot of people doing process re-engineering happening at this stage, because as you start to dive into this as an organization, you start to identify where areas where you can be more efficient. Instead of taking 13 steps to process a certain record, it can be done in 3 steps, because you don't really want to program anything that's going to take you 13 steps when you can do it in 3. The other thing is once you've got these things established, then you can start to build out your automated business rules and actually apply those within your automated processes. And then as well, make sure that you consider your error resolution and metrics reporting. Now, the one thing that's really interesting too about this, and the one thing to consider if anybody's doing process automation, is that if there is something broken in your business processes, that's going to carry through and amplify throughout your entire automated processes. And so it's something to really be aware of when you're going through this. Have you had any experience with that, Keith, in terms of looking at building out automated processes?
Yeah, I mean, that's really my bread and butter. That's what I bring to the finance department more than anything else. We've got, like I said before, we've got so much to do and we don't have enough time to do it. And the only way to go about doing it is to automate that. And what I've talked to my teams a lot about is fundamentally that when they look at pieces of work that they're doing, a large pieces of it are repeatable. People don't identify that as immediately out of the gate. It needs a certain amount of training, and you need to be quite loud in talking about this so that they know that this is something to look for. But once they start to identify, you need to highlight that to everybody in the group. So if you see somebody doing the same thing in Excel, or they say every month you know that they're doing a tax reconciliation, you pull them aside and say, can you just walk me through that tax reconciliation? And then they'll show you that 5 out of the 6 steps are actually just joining 4 pieces of data together. So we actually have an example of that internally. We use our CRM system that actually uses Avalara to calculate tax, and then it passes it through to our ERP system, and that's where we remit our taxes from. And we want to make sure that there's not a disconnect between the calculation that exists in Avalara and the calculation, the journal that's posted in the ERP system. So we reconcile those 2 things. But each of those is just pulling data from 3 systems, checking that they work, and ticking, yep, everything's fine, send off, go and make this payment to Avalara, and they'll do the rest of our remittance for us. But really within that, those 5 steps are download data, join, check. These 5 rules, check them. Does everything work? No. Then I've got that resolution enhancement. It goes to somebody else. We go and talk to, say, the people who created the invoices in the first place. Why does this invoice not look right? That's where the value is. And all of that process has now been reduced from something that takes a few hours to something that can be run on a daily basis. And that's a really simple example as well of, well, we have got very clean data. It's very simple, something we rely on regularly, but we're able to put it in such a way that it continuously checks this for us, and we can kind of set it and forget it. That's the mentality that you need to get to for a lot of these lower level pieces of work.
Yeah, I really like what you said around there in terms of your team being able to identify, here's something repetitive that I do and I'm spending a lot of time on, and then identify it as an opportunity for something for you to automate. And it really seems that your team's already thinking about more and more ways where they can remove themselves from those transactional repetitive tasks. So it's really cool.
Yeah, another thing to probably is worth mentioning here as well is that this data component, the data that you have access to will be of different types. So something we've got the clean, super clean data, as we would consider it in finance, is the stuff that goes into the ERP because of the strictures that we put on it to allow it to get into the ERP in the first place. We have a CRM system that is understandably less strict. It's designed to hold more freeform data as well as some stricter data. And so when you do building these automations and rules based on the data itself, you have to be mindful of the data you've got. Some data is not completely cleanable, and that's okay, provided you know that going in. You can't fix everything. You shouldn't even try to.
Great point, Keith. I have another example here that I thought I'd share with our listeners today around business process automation that was used to reduce vendor overpayments. And it actually comes from one of our ACL customers that was using ACL to really look at how they were paying vendors across the entire state. So in this particular state, all of the vendor payments were centralized throughout an entire organization. And what they found is that they were really lacking a standardized framework or any technology solution to make it more efficient. So it became a very labor-intensive process to reconcile all the invoices, sales reports, POs, everything that was coming in. And they were missing opportunities or missing incidences where vendors were actually charging them the wrong amount. So they were paid, the wrong amount of dollars were going out the door. And so the way they addressed this is they actually implemented automated monitoring for 100% of their payments. And so they were assessing these prior to disbursement. So rather than trying to catch up with these at the end of the year, at the end of the quarter, or the month end, they were able to compare vendor prices right away with what they payments against the statewide contract and what was being offered there, so they could quickly identify any exceptions and only remediate and only really focus on the ones that didn't match. So the people, instead of people spending all their time trying to reconcile those different invoices and pull all the data, they were really just focused on those exceptions so they could deal with them right away. Ultimately, end of the day, they were able to recover $2.9 million in incorrect billing from the previous year. They improved their vendor compliance, which was one of the things that was really important to this. So the vendors knew that they were watching and making sure. So the fraudulent ones were definitely deterred, but as well, people were double checking to make sure that they were invoicing the right amount, because vendors often make mistakes in terms of what they were doing as well. So it really helped to improve the payments that were going out the door and the accuracy and the integrity of those dollars, which really reduced the reputational risk that that particular state had in terms of their vendor payment. So it was really good to see how process automation helped to streamline that process for them. So let's talk a little bit about manual versus automated manual processes.
Yeah, I mean, every finance department is initially built on a ton of automated processes. I mean, manual processes, sorry. If only it was built on a ton of automated processes. It's built on a ton of manual processes, and that's really a function of as you grow and new things are pulled into your organization, you've got new responsibilities. You're doing them very much ad hoc and on the fly to get things done. You've got deadlines, month end, typically a quarter end. You've got tax filings, they need to be resolved. And you do those quickly. You often will use Excel. That's what all finance organizations rely on to a large extent. But that isn't really a scalable thing. There is no rigor around the data that goes in it. There's the process itself. It relies on people to update things. And so you need to transition if you want to get to a place where people will be happier and do more meaningful work to a more automated reality. That I've put here that is the dream. It's the dream state that everything be automated, but it's the dream state that everything that a computer can do well be automated. It's not a dream that everything is automated. Then the finance function wouldn't exist, and we would not be, a lot of value would be left on the table.
Now, Keith, what would you say to someone who said, well, our current system works just fine. Why would I want to change it?
I would say some people think their ERP systems work fine, and lots of ERP systems do work very well, but they're all leaky. They're only as good as the things that go through them, and without extra checks and balances in place to make sure that the data is clean as it goes in, that people actually complete their POs properly, that you don't randomly run up some accruals that you're just not expecting because they're not material. Maybe you don't even check them every month. There's lots of gaps. You've got controls to prevent major things going wrong, but all of these small things can add up. But beyond all of that, they can just cause major time sucks. Something that we had internally is some of our revenue recognition wasn't quite working the way that it should do. And we identified through our regular controls. We knew we had faith that our regular controls would catch those, and it did. And it caught them month after month after month. But it was catching it in month end. It was causing us major headaches on on that time crunch, on that time focus part of our month. And so people were working late. We were all worried that we weren't going to get the results out the door. So what we did was we used an automated process to check for that on a daily basis. It would tell us whether these events occur. So when they occur, which I think happened maybe 2 times in a year, it's really hard to stay on top of something that doesn't happen often. That's the other thing. It's like, it's not going to break, and suddenly it breaks. Oh, we missed it, we've panicked, let's fix it. Now the computer tells us, we don't ever check for this manually. We set it, forget it, and then GRC notifies us when we've got a problem, and we jump on it in the middle of the month and fix it and talk to a vendor about why there might be an issue with their implementation.
I kind of like that point that you made, like previously that your employees and your staff and your team were all working late into the hours and on weekends at the end of the month. And really what you've done through automation is not only made the process a lot better, but improved probably the work-life balance for everybody in your team as well.
Oh, definitely. I mean, there's still always a work-life balance to be improved, but the stress around that RevRec piece has disappeared. It's also something that made it all the way up to my boss is the CEO, and it was noisy at the CEO level. She was worried, well, what does this really say about the system? It's like, well, don't worry. We've got checks in place. We've spoken to the vendor. We've fixed it. An appropriate plan has been built. But just to make sure that you're completely comfortable, we've also put analytics and GRC to work on this. It tells us every single time there's a problem. We can also show through that there are now no problems. That's the other side of this.
Right. Well, could you maybe walk us through an example of how you're integrating robotics and analytics into your one of your finance processes?
Yeah, one of the processes that is very dear to my heart is forecasting. I work very closely with the planning department, and 60% of our cost base is people and associated on costs. So one of the things that we do is we take an organization chart that the senior management team have established is what needs to be in for the next 5 years, with various start dates for new sales staff or expansion of R&D or whatever, whomever it might be. And we distill that down into a data set. So we retrieve that data from a PowerPoint form into an Excel-based form, and we would manually cobble together what that actually means in terms of a forecast. So we would do high-level forecasting on things like social security costs or your retirement benefits or all these other things that we provide to our employees. But they've got lots of nuance. So certainly in Canada, though, we have a nuance around when we pay social insurance. It caps out at a certain point in the year, and our contributions don't continue for the rest of the year. And in our high-level forecasting, we weren't accurately forecasting. That's too hard to get down to the level of granularity. So we were leaving things that in our forecasting that were imperfect. So as we decided, well, how do we actually resolve some of these problems? We basically looked to analytics to help us with that, because that's what analytics is very, very good at. It can manage large amounts of data, and it can perform these repeatable tasks on it. And fundamentally, that is what a headcount and body forecast really is. We know the rules that exist. We want to take the start and the end date of everybody. We want to add inflation on a yearly basis to the pay rises that we expect to happen. We want to overlay bonuses. We want to add in these new headcount as they come online. We want ramping periods for sales staff so they're not, we don't anticipate them being productive on day one. All of those things are rules, and we can distill those rules very easily in analytics down into a set of actions, or scripts that will actually execute on all of those. So instead of going from somebody joins the data together manually and then they're exhausted at the end of this and can't produce the insights that they need to in that process, the computer does all the bit in the middle, the bit that's drudgery. And now the person at the other end can actually look and say, like, does it make sense that cost center went from A to B over this period? You can start to analyze things better. And that also means that each of the managers gets elevated. So when the manager reviews this work, they get to review a different set of activities. And then when I come to review that work, I'm no longer looking down in the absolute granular level detail with them, trying to figure out what the problem is. I've already got faith that we've tested that process entirely and it works every time. We've been running it for about 6 months now, and it saves us time every month. And it's massively more accurate. We can tell you on a per person basis. So for Noni, we know exactly when Noni stops making EI contributions in the middle of the year and when we stop making them. So if there's a difference when payroll actually comes about to make a payment, we can reconcile that and say, like, that shouldn't happen. Was there something wrong in our forecasting, or is the data that's gone to payroll wrong? Or has there been some change in EI and we didn't know about it? So there's lots of flags that effectively tell us automatically. We don't need to go and chase them all down, which, you always drop balls when you do those things.
Yeah. Would it say fair to say is sort of, to summarize some of the advantages that you've been able to get out of it, is instead of spending your time just trying to figure out what those exceptions are or what the data is, you're spending your time just looking now at those the actual areas that need your attention.
Yeah. When we do the forecast itself, we fundamentally now just look at the roll up. We're looking at the departments, we're looking at time periods and seeing if it makes sense, just as we did before. But when we come in to check it on a check how our forecast is actually doing versus the actuals, we don't need to check on a granular level detail. Oh, well, why did this go wrong? Well, these things are massively out. A reconciliation will be done automatically and tell us, oh, the answer is these are your gaps. And you'll be able to look down every single person, every single cost type and see where your problems are. And then you'll be able to go back and either fix them or you just accept that, okay, our forecast is 99% accurate. It's not 100% accurate. And that's actually the place that we're getting to much more. So I think we're up to north of 95% accuracy on this kind of stuff.
Wow, that's actually pretty good. 95 is pretty good.
Hot off the press.
Yeah. All right. So let's actually talk a little bit about the core tenets of financial automation.
Yeah, this is something that I spent time with my group over the last 6 months really talking about, because it's really fundamental to actually moving the needle on a finance organization. Fundamentally, you have to have acquired the right data to be able to do anything. And luckily, with all the people on the call here, you're going to have access to an ERP system. Because of the strictures that are applied, it's already very clean. So you can get going in this process already. If you start to pull other things in, you have to be mindful of the data and what it actually means and how you're meant to interpret that and what boundaries are put upon that data. And you need to get it in a centralized source. So we have disparate systems, but we need to pull that together. We have an ERP system that has great reporting capabilities, but it will not allow me to access our CRM. So I can't figure out information that's useful about my customers because the ERP system can't see it. And the same goes the other way. So you need to get it out of the system in a place that you can actually even access it. Once you've done that, you need to start thinking about this process of going through the steps to actually clean the data and get it into a useful format. So just as I mentioned with the headcount process, there's a bunch of steps that just are crunching the data. And we could set this up such that people change the organization chart and it would automatically give us the latest version of the numbers. And that could be on a scheduled basis. I mean, we don't change our org chart that frequently, but we change other things frequently, like bookings forecasts what we expect to invoice our new customers, those things. We can automatically pull that data, test it. We don't need to be involved in the population of that data. It just gets done for us. So suddenly we're out of the weeds already. Then somebody really has to be able to act on it. There's no point in collecting all this data. Like, we're drowning in data. It's so true. But the other side of it is, not only have you now analyzed it, you still need to do something with it. It's all well and good me knowing that, oh, T&E went up $100,000. Well, what am I going to do about it? Am I just going to go, it's $100,000, who cares? Well, maybe I will. Maybe I'm okay with that. I think probably I wouldn't be, but somebody has to do something about that. So there's a level where you have to go back to people and talk in the business. Hey, there's a problem here. Why is this so wildly different to the forecast that we discussed last month? There needs to be some action. And that's what GRC will help us with. It helps us manage that process. And then ultimately, you need to be able to report on it. So as much as I can go and talk to the sales guy and say, hey, you spent all this money on T&E, why is it not what you anticipated? Or even the other way around, like, why have you vastly underspent on it when we only talked a month ago and you thought it was going to be $100,000? It's much more helpful for them to be able to see what that actually means in charts rather than just a stack of numbers. As much as I like looking at numbers and I can understand them, that's a skill and it's a learned skill. It takes time to get good at that stuff. Whereas looking at charts, it's much more easy. People get going and understand what you're talking about very quickly. And then really, once you've elevated your team through this exercise and you start to clear away things, and even, especially through reporting, you start to enable people in the rest of the business to look at those reports themselves. You don't even need to, you don't even need to take the horse to the water anymore. They're already there drinking it. It allows you to elevate the rest of your staff. And what that effectively does is it allows them to spend more time on professional judgment than it does on data crunching. And fundamentally, when we hire people, that's what we want. We're hiring them for their professional judgment that they can bring to bear, not on their ability to join 3 sets of Excel together. Clearly, that's a useful skill and it's important when hiring people, but the professional judgment is what we care most about.
Cool. That's really interesting, Keith.
Sorry.
And that's okay. And I think one of the things too that sort of stuck out to me there is the fact you talked about the reporting and bringing that information to the rest of the business and bringing it in a format that is consumable and actionable. And working at ACL here and being one of the, I guess, people that digest some of the reports that you produce, it's amazing actually to have that level of transparency and to know where we stand anywhere from our marketing metrics or our product metrics or even on the business side of things. So
and there's so many examples. We have examples where we monitor our cash and our bank covenants to make sure that we don't ever fall offside, and we've got a long foresight into the future on that. It's something I worry about, obviously. But there's other things, more simple operational things like on T&E. We look at hotel costs and see how many these particular brands of hotel people are going to premium hotels. Why is it that salesperson A is going to the premium ones, salesperson B is going to the more regular ones? And you can see a trend. It enables you to have a conversation that's actually much easier. Instead of going to somebody and saying stop spending money on hotels, you're expensive, it's not appropriate. You can go and lead them to their own conclusions. I'm spending a lot of money on all those really expensive hotels and nobody else is. This is a bit embarrassing. I should really pare that back. Or maybe through this, you just find that, no, that's the hotel next to the customer and it's the only hotel around. But you've had that conversation, you can put that to bed. Yeah. And then it can be part of your forecasting. Okay, well, I know that for the next 6 months, that's just going to be more expensive than I anticipated.
Great. So from a technology standpoint, really what we're talking about here is looking at how we looking at identifying initially all of our disparate data sources and identifying what was useful of that information that you get, that what data is actually useful from those disparate sources. And that really links back to your business processes that you were looking to initially look at and automate, and your policies and procedures, and identifying which are what is the frequency, what is the data requirements that you actually have for those. The next step, once you've identified your data, these first two steps would be really those sort of one-offs that you're doing. You begin to actually automate your data by doing a data extraction. And here at ACL, we actually use our own gear to extract all of our data. Then move on to flexible scheduling so that you can actually pull all the data at a regular or at a scheduled time period. And then move on next into alerting your stakeholders and remediating. So these are the reporting or the actual dealing with the actual acting upon any of the exceptions that you find. And that's where that professional judgment really comes in, that human insight. And then next we have the ability to report. So really monitor and report out to stakeholders. And again, we're using a lot of our own gear here at ACL. We use our GRC platform to report everything out through dashboards so that information that is relevant to you is accessible in real time at any point in time. So it's a really simple process. And the next step that happens on that is, of course, we want to lead that back into the data extraction. Anything that we learn, any insights that we gain, any human insight that we have, we can continually evolve those processes, evolve our analytic scripts, evolve when we schedule those and how we report that out to remove the overall operational burden.
Yeah, and we do this, we've done this in finance lots of times. We start small. We look at things like, how do we match a few simple rules together in some data so people don't have to trawl through the data. And then as we actually get better at it, we say, actually, there are more nuanced rules. So let's start to build some of those rules in. And so we go from like a 50% match rate to a 75% match rate. And over time, you iterate closer and closer to a perfect state where 99% of things are matched and they work. And if they don't, they're real exceptions that need to be investigated. They're not false exceptions.
Yeah, I think that's a good point there. The having false positives is something a lot of people worry about when they initially set up any sort of automated monitoring, because they're just worried about how many false positives they're going to get. And initially, yeah, you are going to find quite a few false positives, and that's why it's important to constantly iterate on the analytics that you're doing so that you can eventually hone it down to the things that are really, really important. At the end of the day, though, by taking that step, if you hadn't taken that step, you're going to end up with missing a bunch of exceptions that potentially could be quite material.
Mm-hmm.
All right. So I think another point that really speaks well to that. Whoops. The other thing, I think one of the things that I always like to emphasize as well when we talk about those red flags is it's identifying red flags only matter if something is done about them. And you touched upon this a few times already today, Keith. Did you want to mention any scenarios around that you've had?
We fundamentally, if people only do something when they're held accountable, and as much as I work with lots of good people, they're all very busy as well. It's not that they're doing it maliciously, but there needs to be a program in place where they can be held accountable at all times. And we've got lots of things left that we need to hold people more accountable for. And as we free time up through this exercise, that's very much what we do. But certainly with T&E, when we chase people we have corporate credit cards, people don't submit their expenses on time. We use the system to notify them to go and do that. And then if they still don't react to it, we at least know all of that information. It's readily available. It's to our hands. We can sit down with them and go like, look, on the spectrum of everybody, your expenses haven't been submitted for 60 days. Most people do it within 30. We have some people who are even more offside than that. And then we can start to move into the other side of it. Like, look, this is the data. You're still not listening to us. I'm just going to cancel your card. Like, you're not leaving with me any alternative. But the data is there and it's very clear what it says. They don't really have any recourse. And as much as they might be disgruntled, it's not for your lack of trying. It's for their lack of effort. And so there's this feedback mechanism that protects the company. If you're not going to do the work that you're meant to do, then you don't get access to these benefits. They're taken away from you. I think these sound all punitive, but they're very real. They're things that we do they happen at ACL. They're real examples.
Definitely real examples. Speaking from one who does expenses from time to time. I think the other thing too that's important to note is is when you are thinking about how you're dealing with any of these exceptions is including those as part of your automation process. So many times I've seen people they've automated their scripts, they run them, all the exceptions are outputted to something like Excel, and then they sit in somebody's desk. And that person might be great at following up on all of them, but what if they go on vacation? What if they quit? What if they get fired? Something could happen where then that data is being lost. And so it's really important to incorporate that follow-up and remediation processes as part of your process automation as well.
Yes, making sure you complete the loop. We're as guilty as anybody. We do this analysis, we run these scripts, and then we run them even locally. Mm-hmm. And sometimes they get left being run locally. But it's really important to get them onto that centralized server so you don't have to worry about somebody leaving. It's something that keeps me up at night is the amount of things that we have that behave that way.
Cool. So we've talked a lot of theory today already. I think it'd be really good to share with our listeners some tips that you've learned about getting started and implementing automated processes.
Yeah, so really getting started for me has two parts. There's a common challenge that we have. And it's a truism for actually lots of different projects, but it's very much relevant for finance. It's getting management buy-in to what you want to do. So if you want to pull data from disparate systems, you still need to get management approval for that. We're very lucky in ACL that we actually have got huge buy-in on all of these projects. We're a company focused on this, so it'd be crazy if we didn't have buy-in. That's not the case everywhere. You need to get to people to see the value in that process. And that will often mean getting budget and time. Even if it doesn't mean dollars, it does mean separating time out in your organization to only spend on this project. For it to really work, it has to be something that's always there in the background. It's not a one-time exercise where everything's fixed and then we move on. Another part is accessing siloed data. There is always a lot of data in every organization and you need to get it together in a place. So you're going to have to work with IT in all likelihood to pull that data together. You're going to have access problems. They're probably going to have people who don't want you to access certain types of data for completely appropriate reasons, but you've got to get what you need into a place such that you can use it. And then you really need to market it to the rest of your team. It's hard to make change and people are, for good reason, reluctant to make changes. Things work as they work today. They know how to do, they know what's expected of them. And in the new world, they're not really sure what that means. So you need to be clear about what your expectations are through that. And you have to talk about it a lot so that it makes people calmer and understanding like, no, actually we're all going to move along through this journey. It's not just for people who are going to be elevated and everybody's going to be left behind. This is not an exercise in firing people. My team that's not what I'm looking for. I'm trying to elevate everybody. Other thing is really having a team with the right skills. And that isn't just, everybody becomes an analytics expert. That is, everybody is elevated. So some people are really good, they become better. Other people can move along that spectrum. And some people will move to a plateau, and maybe they won't continue, but they'll still have skills that they didn't have in the past that will help them move the needle when it comes to automation. And that's something you're going to have to pay a lot of attention to actually as you build that. So really, where do you actually start in this exercise?
That's a good question. We're going to talk a little bit about that in terms of identifying where you are today. And so something we use here at ACL is what we call our analytics maturity model, which walks you through from going where you're less sophisticated on the left, more sophisticated on the right, more looking at a reactive hindsight version on the lower side, and as you move up the y-axis to having the ability to have more foresight. So level 1 is very basic. You may be using analytics, potentially on an ad hoc basis. You might decide to do some in your year-end or monthly end to really look at some of the data. Level 2 becomes more applied, really trying to plan ahead of time to use some of your analytics in there, but they're not really automated at this point in time. Level 3 becomes managed. It's something that they're being, the usage of analytics and data becomes more part of the schedule and things that you're doing. But at this point, it's not truly animated. It's just part of the work that your team is doing on a monthly, on a quarterly, on an annual basis to really make your team more efficient. As you move into level 4, that's where you start to see the automation take place, where you start to actually remove some of those very transactional, repetitive tasks in terms of getting the data, processing, identifying exceptions, following up on them. And as you start to become more and more automated, it allows you to elevate to level 5, which is really a much more strategic, predictive usage of the data. And so it's a good way to sort of it's good to look at this maturity model in terms of identifying where you are today and then where you want to get to. It doesn't mean you're going to get to that endpoint tomorrow, but you also, it can give you a goal in terms of what are the steps I need to take along the way. And Keith, just maybe quickly, as a good point of reference, where would you put yourself on this scale?
Is my boss listening? I'm just at level 5, looked at everything. No.
Boss isn't
this
listening.
Is a spectrum. She's not listening. She's on holiday. This is a spectrum, and it's multifaceted as well. This is not meant to represent just the finance function or the organization itself. If you copied this slide a million times, there's so many different places this exists. So within AP and AR, they may be at the automated level, and it may be that accounting is at a more basic level. And for us personally, that's very much where we are. So we do have stuff on the strategic level when it comes to like bookings forecasts. We get incredibly, I think it's about hourly updates of data, and then it runs through the system and we check what our latest forecast numbers will be. But on a more basic level, we do have other things. So a few years back, when I first started down this road, I looked at using ScriptHub and downloaded one of the scripts, mapped the data to see what our duplicate payments were. So on a basic level, it was saying like, yeah, have you got any duplicate payments? I think it found 4, and thankfully none of them were actually real. So our control gave me great confidence in our controls. But I didn't automate that. I mean, I should have done. I should have just finished that process and moved it from level 1 to level 4. Now I can set it, forget it, and it'll tell me when there's another duplicate payment. So we're very much on a spectrum, and it depends the skills in each of the group, how much time they've got, what other pressures they've got. We've got an audit on at the moment, so we're not really moving the needle right now. But in a month and a half, when our audit's finished, well, that's exactly what we're going to get back to. How do we elevate entire groups along this spectrum? But even processes within their groups, they're on different parts of this spectrum.
Just curious, since you brought it up, you mentioned we have an audit going on right now. How has how's having a lot of these processes automated and a lot of your data automated helped in terms of your audit work?
In many ways it hasn't, because we've only just started in trying to get to a place where we can do attestations and things like that in the system, and then we can show that our controls are actually being adhered to, rather than saying like, no, you're gonna have to test our controls to prove adherence. Mm-hmm. So that's something that we're actually wanting to move to. That's something that's basically for the next 6 months to a year we're going to be focused on. But there are whole pieces of it that do give us a lot of faith that our numbers are correct. So there's recent RevRec changes, ACS 606 that I mentioned before. We were hounded by a bunch of software vendors that saying, oh yeah, we can solve this problem for you. Like, no doubt you can solve this problem for me, but I don't need you to, because I've got analytics. So we were able to basically calculate all of our costs, capitalized commission payments out for the next 13 years or however far it goes out. And then we can show the auditors that this is our methodology. You can rerun the test, like do it however you want. We've already done it 3 ways ourselves to gain confidence. Now it just runs, and we just press go every month. It gives us the answer that we're expecting. So it gives us great faith, and we're like, yeah, we've got to a place that we're comfortable with. And once the auditors are, I'm sure next year it won't be something that they need to test very hard. They just need to look, did your script change? Nope. Like, you can check the log. The log is the same as it was. Okay, we don't need to audit that anymore. There's a control there.
That's very cool. I'll have to follow up with you in about a year and see how that's all working. So why don't you walk us through some of your best tips for getting started?
Yeah, I mean, fundamentally, first and foremost, is start small. The worst thing you can do is treat this as a big bang approach. That you could automate everything. Clearly it's possible. I wouldn't advise you do that, but it will take you so long to get there that no one will see the value. And as a little personal story, when I was setting up the data science team, one of the things that we did was we had to clean a lot of data to get going. It's not like financial data. And it took us a long time. It took us about 6 months to get to initial value. And if I had to do it again, I would have gotten through that faster, but gotten through that to a point where I could say, like, okay, I can extract value out of it now, and I can show value to my stakeholders. Because there was certainly frustration that, like, well, nothing's coming out of this. Like, yeah, it's really, I want to get to where I'm trying, but it's a big bang approach. Whereas in finance, we tried to do that a few years ago as well. We've got a great tool in our ERP system for reporting. It's complicated. My assumption was that once I trained everybody, they could just go away and solve world hunger with our ERP system, and they couldn't. And it's frustrating because I knew that the tool was powerful enough to make vast and impactful changes to the organization. But as we've gone through this latest round of automation, I've taken a much more different approach, which is like say, no, it's okay to use whatever tool you use. If you use Excel and you improve some of the things you do in Excel, that's okay. I'm not trying to, I want small improvements all over the place. often cases they're actually much better than one big bang improvement that happens every few years. And then really the next thing to do, to consider, is to invest in the right technologies. And pointedly, it says technologies on this slide because there is not one technology that is a master for everything. We use analytics and we use GRC, and we use them when they are the most appropriate, and that's when they're most impactful. But we also still use Excel to this day. When I have a meeting with somebody and I go through their numbers, it's really impactful. They understand how Excel works. Everybody knows how that tool works. It's a good place to share things, but it's not a good place to scale and compile data. So we don't compile it in there. It's just an end tool that we can share with users and that has meaning for them. But even that can have limitations. And that's where we look at reports in Reports Manager in GRC. So we can actually, Results Manager, sorry, in GRC. So we can look at reports and they can just go through and see their latest comments on things. You have to make sure you pick the right technologies for where you are on the spectrum. There's lots of technologies out there, and no one is going to solve any one problem. But you also need to know where you are on that journey of implementation. So you probably will start to add technologies as things progress through your cycle.
Yeah, that's a good point. And I think too, like it speaks to that first tip that you gave where you said, start small. You don't want to invest in a technology that's going to take you 2 years to actually set up, to actually become efficient on. So really having something that can scale with you.
Then really you have to build your team. Now, the reality is that you're not going to be able to build a team. You've got a team. Even if you're new and it's a small company, there's still going to be people in that team. You need to get to a place where the team is elevated. You're making the team better than it was. If you're fortunate enough to be able to get new headcount, or and most finance organizations aren't. I was reading a survey the other day that said only 22% of finance organizations are expanding. Most are 50% are staying as they are, and the rest are looking to reduce their department size. So given that's the case, the only real way you're going to be able to do this is by identifying those people in your team who can actually elevate the rest of your team, and then across the board of giving them a bunch of skills that they need to move on. I think it's also worth mentioning here, this quote from Elon Musk, is that automation is not the end. That's not the end state. And if that is really what your end state is, then you're making a mistake. Humans are completely underrated, but what they're not good at and what they should not do is this data crunching part in the middle. That's not what they're good at. They're good at using judgment to get to conclusions. That's what we want them to get back to. So I've got a slide here that really talks about what I consider to be the role of a finance function. Fundamentally, it's 3 major buckets. We perform communication, we've got operational activities, and then we've got strategic and business activities. So, and each of the people in the organization impact upon each of those. Everybody's involved in month end in some fashion. People perform collections, but collections have impacts on what our forecasts of future collections will be and what our future cash will be. So that everybody's intertwined within each of these processes. But there is also something that sits underneath all of that. Different people bring different skills to each of these parts of the organization. And so I don't know a lot about tax. I would be the first to admit that. I've tried and I do not think it's very interesting. So I've stopped trying as hard as I used to try. But M&A activity and modeling, I really do like. And those are the things that I can bring to bear. But when I work with somebody who's got tax knowledge and I've got modeling knowledge, we become better than the sum of our parts because we bring other things to the table. And that's really what a finance function actually is. It's a group of people with disparate skills brought together, just like any organization more broadly, to do things that they couldn't possibly do on their own. But something that's really fundamentally missing through this whole process is that automation and analytics. What we want to do is we don't just want it to become another square at the top next to communications. It's not a person. What it is it's something that needs to bleed through the entire organization so that everybody is lifted. All boats are lifted at the same time. And as I mentioned before, something that's really, really important is to bear in mind that small improvements are as important as big ones. There are only a select number of people in every single organization, especially within a finance function, that even have the skills to do that. And they're probably not the person with the tax skills, or they're probably not the person with the collection skills. So they don't really know all the nuance that's actually required in each of those. But having everybody with a mindset that, oh, actually automation is really important and I'm going to focus on it. I might not be able to do it myself, but I can identify where there's something that could be automated. I'll go and ask other people who've got those skills and can actually help me with it.
Those are really good points. One of the things I think a lot of people encounter as well is the resistance within their team. Can you speak to a little bit about that?
Yeah, I mean, only human. Things you don't know are scary, and it takes time and effort to move from where you are today to where you want to be. I'm very fortunate that my group we've turned a corner, and we are much more willing, but that was as a function of successes that we had. So one of the things that I did do was I wanted to move our month-end close from 7 days to 4 days. And I got a lot of worry and concern. I got a lot of people who were of the opinion that, yeah, let's give it a go, don't worry. But I was very clear with them, like, this is an exercise in trying, not an exercise in succeeding. We're not going to know what's possible until we give it a go. And I was up front at the beginning. If it fails, that's actually not failure. We found out things through that exercise. It turned out that actually first time that we did it, that we could shuffle things around, and it just worked. But a large part of that was that we'd gotten over that emotional hump, and people were willing to come along for the ride. And if they're not, they're going to make things break. Not maliciously, but by their lack of not being bought in, they're not going to move the things the way that they need to be moved. So a lot of it is just talking a lot about what is important to the organization, and constantly communicating to your group that, yeah, automation and analytics is important to us. You do not all need to be analytics experts, but I do expect that you will all start to look at things and view things from a way that, can it be automated? Could I get help with this? Could I help somebody else? Like, I may be good at Excel. I might not be good at writing automation scripts, but the new hire, maybe they're not as good at Excel as I am, and I could probably move the needle a bit for them. That's what it's really about. And building that kind of inclusive environment where everybody can come along for the ride is really important to reducing that emotional resistance that happens when you start to take on these kinds of projects.
Such a good point. And I think you were telling me a story before as well around just even the different approaches of introducing these technologies to your teams, or people with different skill sets.
Yeah, that's right. When we went through this exercise, one of the things that you've got promoters and detractors. And for the most part, I don't actually have detractors. I have people who are just worried. They're not deliberately negative or anything like that. They just don't know how to get going. So one of the approaches that I took was all the promoters, I knew that they would just get cracking, and I could point to their successes to bring the people who were just neutral along for the ride. But for the detractors, it was a case of saying, like, look, I know you've got the analytical skills. You're an accountant. You already think in an analytical way. You couldn't do your job if that wasn't the case. I just need you to apply it to the technology that we use to solve these problems. So I sat down with one of my accountants, a tax accountant, and said, we do that tax reconciliation I mentioned before, and said, right, you download it from these systems, or how about we automate the download of that process? This is where you get the data from. Why don't you go and try and download that data yourself? Then you've learned how to do that, and you can apply that next time. Let's join the data together. It's like 2 or 3 steps to get to where you need to be. Let me show you how that works. I'm not going to do it for you. You've still got to do it. But if you get stuck, just come and ask me. And so whereas it might have taken me 4 hours to do it, it probably might have taken them 8 hours to do it. But the difference is that they now learned that, oh, it's actually possible. And so they've talked to me about other things like, oh, maybe we could actually automate this piece. And that's the that's where that's the gold of all of this. This is what you want to get to. If you hit pay dirt when somebody who was a detractor or was worried still understands that they're not the world's most technical person, but they can come and say, like, I've identified something else that we could possibly automate. Like, fantastic. That's what I wanted all along. Didn't need you all to be analysts.
That's great. And I think really it syncs back up to the last point that we really wanted to talk about, is that robotics make people more human at work. So what you talked about earlier in terms of adding human judgment and professional judgment into the work that we actually do, rather than making people do those repetitive tasks. And I think ultimately too, if you look at that analytics journey in terms of the automations journey that you've taken along the way, really great points that you've shared with us today, Keith, in terms of starting small, making sure you're using the right technologies, building out your team, and really making sure that you're pulling in the right business processes to automate at the right time. Those are some really good points that I took away from today. Is there anything else you wanted to add to that?
Having no sound like a broken record, but just start small.
Just start small.
The times when I've done this and it's failed is that I've said, this technology is amazing. Go do these amazing things. But that doesn't move the needle at all. It's when there's a culture, and you've got to build that culture of, it's okay for things to go wrong. Just focus on automation, get help, build a team of people who help each other.
Great. Well, thank you very much, Keith. We've got a couple of questions that have come in today that I was hoping we could potentially answer, given the time that we have left. first question is what advice would you give to someone looking to build a business case for automation within their finance team?
I would, again, it sounds like a broken record, I'd start small. But I pick the things that, Noni mentioned it earlier, there's a lot of low-hanging fruit. Like doing PO reconciliation it's not rocket science. Like we're just talking about multiple steps, but at the end of it, the value is enormous. You can, especially if you work in larger organizations, I don't know what organizations we've got on the line, but if you work for some huge industries like Boeing or somebody like that, the amount of money that's just sloshing around, left on the table, not through anyone's fault, but it's available if you go and look at it. And then your ability to point to that and say, like, that's a return on investment. You know, it costs me X, but I got 100 ROI on this on day one. Suddenly, that will open people's eyes. Like, oh, wait a minute, you did what? Oh, what else can we go and look at? And then you start to build that momentum. Everybody in the organization sees the value. And that's where I would start. And that's where I did start to, I was interested in what it could mean for us, but we've started to leverage it in places that are much more strategic as time's moved on.
Yeah, and that's such a good point. I think some of the most successful customers that I've been able to work with here at ACL is they did exactly that. They started with something that was relatively simple, something like purchase cards, and it might have had low materiality, but they were able to get to value relatively quickly and prove it out as a process within their organization, and then move on from there to bigger and more exciting things.
Mm-hmm.
So it's really getting that, helping with one of those challenges that everybody faces, where you have that challenge with management buy-in, with your team buy-in, even just learning how to access the different data sources that you have, rather than waiting 2 years to figure out that this big grand plan that you had isn't going to work, or it isn't going to produce the results that you have. It allows people to create something that's relatively low cost, get in there quickly, and start to build out from there. Next question we have in for us today is, what's your next steps, Keith, for you and your team?
Very much is around that control framework stuff that we touched upon earlier. We have actually what I believe to be a very good control environment, but things that are missing from it are truly attestable results. We have Excel, we do a reconciliation, and at the bottom it might be presented in Excel, and then a manager's reviewing that. That needs to be moved into GRC so that actually it shows that somebody logged into the system and they said, yes, I did that thing. And then it's like, well, the control was actually, that part of the control was adhered to, and an auditor can look at that and go, oh yes, that was actually done, and I can check it against the results. And now we're starting to move the needle we could move the needle with the auditor to say, like, I don't want you to do the kind of audit you've done in the past. I want you to be able to test what we've built in analytics and GRC and use that as the foundation of whether or not you can gain comfort over our control environment and subsequently over the accuracy of our financial statements.
Great. And I think we have time for one more question today. So I'm going to ask you this one that's come in, and it says, how does automation help you sleep at night?
Well, I mentioned earlier that reconciliation that we do for the revenue recognition, that definitely does that. When that happened, that was a problem. Everybody dropped everything, went about fixing it. I wasn't actually working in the finance department at that time. I was brought back into the fold because I'd done the ERP implementation. But I worked with somebody, one of our analysts, to implement the kind of watcher that just sits in the background and gives us comfort. And so the next time it happened, it was almost kind of oh no, it's happened. But at the same time, it's complete validation, like, oh, awesome, this has happened. And our test did exactly what it was meant to do. Now I don't have to worry about this anymore. And it's happened a handful of other times. Some of the times it's been false positives where we haven't ingested the data. We've got timing differences in data, but it still should have given us an error. So that at least we've looked at it and we're like, yep, the test still works. We just need to clean up the ingestion part of our data. So it's on that tweaking we talked about earlier, but all of that makes me sleep better. And there's a lot left to do. Certainly, as we have aspirations to be a public company, I want to get to where we can attest all of our controls. And I get a nice big overview in a mission control that shows me, yep, these are all the controls. These were performed in this period of time. That will be when I get the most sleep. That and when my children grow up anyway.
Good point. All right. Well, that's all the time we have for today. So thank you very much, Keith, and thank you, Jill, for moderating our session today. And thank you, everyone who's taken the time out of their day to join us. Have a great day.